Here's a fact that sounds like a contradiction. The richest people in America pay the most taxes in total dollars, and they pay one of the lowest rates on what they actually gain each year. Both of those are true at the same time, and once you see why, this whole debate stops being about good guys and bad guys and starts being about machinery almost nobody gets shown. Deceiving numbers. Net worth isn't cash. Start with the thing most people get wrong. When you hear that someone is worth $50 billion, your brain pictures a bank account with 50 billion sitting in it. That's not what it means. That number is almost entirely paper. It's the value of company shares, real estate, and ownership they haven't sold. It's a price tag, not a balance. If they tried to sell it all at once, the price would crash before they finished. So the headline number and the spendable cash are two very different things. Here's the honest twist, though. What the other side points out. And they're right, too. That paper wealth isn't frozen. The ultra-wealthy borrow against it. A bank will happily lend you millions using your stock as collateral at low interest. And loans aren't income, so there's no tax on the money you live on. People call it buy, borrow, die. You hold the asset, you borrow against it, and you never have to sell. So is the wealth liquid or not? The honest answer is, it's liquid enough to live on, but not liquid enough to hand the government a cash check every year. Both things are true. Hold on to that tension. Two different machines are in play. Now the second mechanism, and this is the big one. Income and wealth are taxed by two completely different machines. The income machine is simple. You earn a paycheck, the tax comes out, every year, automatically. Most working people only ever meet this one. The wealth machine runs on a different rule. Call it the realization rule. Your assets can grow in value for decades, and none of that growth is taxed until the day you actually sell. Until then, on paper, it grows completely tax-free. The consequence of not understanding the system. So picture a founder whose shares climb by $1 billion in 1 year. On paper, they got $1 billion richer. But in the eyes of the tax system, they earn nothing, because they didn't sell. They owe zero on that growth. And there's a final twist that closes the loop. When that person dies and passes the assets to their heirs, the gain gets wiped clean. The heirs inherit at the new value, and all those decades of untaxed growth are never taxed at all. That's not a loophole someone snuck in. That's how the machine was built. Why both talking points are true. Now go back to where we started. When someone says the rich pay most of the taxes, they're talking about the income machine, and in raw dollars, they're correct. When someone says the rich pay a tiny rate, they're measuring tax against how much richer those people actually got that year, paper growth included, and they're correct too. They're just pointing at two different machines. Almost every fight you'll ever hear about this is really two people standing in front of different machines, yelling past each other. The actual debate, both sides straight. This is exactly why a wealth tax gets proposed. The whole idea is to reach the growth the income machine never touches. And here's the fair version of both sides. Supporters say it's the only way to tax fortunes that otherwise grow untaxed for generations. Critics say you'd be taxing paper gains that can vanish, forcing people to sell to pay the bill, and that valuing private companies every single year is a mess. Both of those are legitimate. The European countries that tried it and quit mostly failed on the details, like low thresholds and loopholes, more than on the idea itself. The design decides the outcome. So here's what to take with you. Net worth is a price tag, not a pile of cash. And income and wealth live in two different tax worlds, which is why honest people can quote opposite facts and both be telling the truth. You don't have to pick a side today, but once you can see the machinery, you stop getting played by whichever talking point sounds good, and you start asking the only question that actually matters. Not, should we tax the rich, but which machine are we even talking about?